Yeah,
Well,
I
so
mean,
let me just share what happened, and then I'll give it to you, Chris. So this is what we got today on Disney earnings. EPS beat $1.03 versus 95 cents expected. Revenue was a slight miss at 22.3 billion. Street wanted 22.5. Now the big one was Disney Plus total subscribers came in at 146 versus 151 in terms of millions. About 11.2 million people, if I don't have the number wrong, unsubscribed from Disney Plus this quarter. Now that was the initial results. Stock was down 1% after hours, not a big deal. Then on the call, they announced the dividend is back. And the stock went up about 4%. I think right now it's still at around 89, 88. So basically flat on the earnings news. So the dividend is back. Stock went up a little bit. Revenue and subscribers missed. And then the biggest thing I got from the earnings call was that Bob Iger was specifically asked about a buyout. And he said he can neither confirm nor deny basically any rumors or any thoughts about a buyout. He didn't shut it down immediately, like Alex Karp that says, like, we are not for sale. Bob Iger did not say that. So given all of that, Chris, what is your perception to the earnings? And then you can get into a little bit more around if you're still bullish or not on the company.
So this is where I think people who do real due diligence on a company end up winning versus people that just read a headline and invest that way, right? So the subscriber growth number that you saw, the 11 million subscriber decrease, when you look at the numbers in physicality, like you break down of what it is, like Disney core subscribers for Disney Plus versus all these people in India that were getting something with the IPL. IPL is Indian Premier League, which is a whole cricket like thing. So imagine right now the NFL for us. Disney was paying a lot of money to air those rights on Disney Hotstar, which is like a big streaming platform in India. And they have close to almost 50 million, I think almost 54 million people in India subscribed to Disney Hotstar. It's the largest streaming DTC app in India right now. But Disney said, look, we are not going to pay all this extra cash, these billions of dollars, and we're going to run at losses. Okay. We're going to get rid of the IPL rights. Like the IPL rights came up for auction. Disney said, look, we don't want them. That's fine. Like we need to get back into profit mode. So imagine right now you're a business. In your business, you want to grow constantly. So that means that you're going to take a loss on every single product you're going to sell. That is not sustainable. You can't do that. Over time, yes, you may get a lot of people coming to your store because you're selling something at a discount to what it's actually worth, but eventually you'll go broke doing it. Disney flipped the script and says, look, even if we lose some subscribers, it doesn't matter. We're going to cut back on spending, right? And we're also going to raise prices on some of the stuff that we have. So what it is your revenue, for the most part, for Disney Plus and the DTC is staying relatively flat, if not growing a little bit further up. But on the other hand, your costs are going down significantly. So now what happens is you're going to end up in a much more profitable situation. So as an example, look at Netflix. Netflix for 13 years did not make money. Why? Because they slowly developed a content strategy that was around profitability, where they were getting properties, they were developing the content around it, and then slowly raising the prices to the point right now where everyone and their mother is willing to pay Disney the higher amount that Netflix is asking for. Also, now all of the streamers are in the same boat. So if you look at the pricing for all the streaming services, they're slowly starting to make their way higher.
Disney upgraded to $13.99, correct, today?
Yeah. And then on top of it, they have a ad-supported tier now too. So if, let's say, you don't want to pay this extra money, you could watch a few ads in between your shows. And, the ads are now targeted ads, which actually run a higher ARPU rate than what you would normally get anyway from just that consumer just paying your subscription fee. So what it is when you add the mix of ad revenue plus the subscription plus everything, profitability ends up becoming a lot more achievable for Disney. And the thing is, it's not going to take them 13 years like it did for Netflix.
So your argument is the 11 million subscriber loss is because they gave away the sports leagues rights, and it's not a big deal. People aren't actually canceling the subscription.
They are canceling them, but it's such low margin stuff that it doesn't make a material impact. I mean, most of these people in India, they were paying like, I think $4 or $5 ARPU a month, right? So if you got rid of that many people in that region, but then you were able to add like higher revenue, higher tier people in other regions, it just offsets the amount.
Right.
The thing is, you cannot spend way more than you take in. That's not a sustainable business practice. They lost last year almost $1 billion a quarter in doing DTC production, right? Whether that be through content and everything else. This year is like the year of the turnaround, and the turnaround starts with becoming more cash flow positive. So everyone was looking at subscriber numbers. I was more focused on operating income growth, which is just on another level for Disney. Disney has always been a cash flow machine. So they're just getting back to the roots of that cash flow machine. And when it does happen, people are going to wake up and be like, wait a second, like, how is this possible?
So this is what you said
So
about cash flow. You said cash flow from operations from a decrease in content spend, increased streaming prices, growth in parks, return of high levels of occupants at cruise and international parks. Disney's biggest draw was the immense cash flows this company can generate and invest into long-tailed assets. So your argument is in this earnings, you saw cash flows go up a lot, which is why you're excited about the earnings.
Yeah.
But even aside from like the one-time things like reducing headcount.
Yeah. Because remember, those are not reoccurring expenses. Their revenues are still going up. Maybe not a lot, but they're still going up. So if your expenses are cut down, that's not a reoccurring revenue that you're going to be facing next time.
But it's all right. But I'm saying it's a savings you can only show on one quarter. So
no, because what happens is, think about it this way. Those are 7,000 less people that are going to be working for you. So next year, you're still going to benefit for that. Your revenue every year is still going to be cycling in. It's just your expenses won't be.
Your expenses are going to stay. You're not going to see that. In other words, what I'm saying is you're not going to see the drop in expenses quarter over quarter. You're going to see the drop now, but they should maintain relatively at these levels. And what was it, 7,000 employees?
7,000 employees. And I think at the same time, there's other expenses that they're cutting back on as well. They did take, from a net income basis, they did take a hit in terms of taking some, what is they called, write-offs on some of the content that didn't work out so well. But that's like very small in comparison to the overall picture of where they are in terms of cash flow. Because
bring up ET
cash flowing like crazy.
ET FaceTime 416. Revenue is 2 times what it was in 2014 with the same price, same stock price. Exactly. The other thing is they are like they were a dividend beast, and they were held in a lot of funds specifically for that dividend. I'd imagine a lot of that money came out as they need to. I think they have those dividends for it to be in a lot of these people's retirement accounts, and you should see some of that money come back in and get around. That should at least be worth 10, 15 bucks in the stock price.
So let me ask the question on the dividend. What does that mean necessarily? Does it mean the bear case is they're becoming a value stock, or does that mean more people should get excited if they're giving a dividend? How do you interpret that, Chris?
Well, I mean, Disney was always like a dividend aristocrat prior to their acquisition of Fox, and also at the same time dealing with the problems with COVID, because their parks and recreation business generates a ton of cash that now the cash can be used to support a dividend, right? That's what happens. The business generates cash. It uses some of the cash to pay the shareholders a dividend. When they took away the dividend because of COVID, and all the park closures, a lot of people said, you know what, I don't want to be in this company. But a company that's paying a dividend, and especially one that has a long history of a dividend, tends to be something that people will give a little bit of a break to in terms of like valuation, right? So if your valuation is especially something like Disney, which has like what is that thing? Reoccurring revenue at a safe what is that thing called? Relatively safe business. Then yeah, it's one of those things that you give it a little bit more of a valuation to.
Matt says they used the $1.5 to $2 billion in dividend payments to invest into Disney Plus over the past couple of years, so it was a smart move, in his opinion.
Well, the thing is, they had to do it in 2019. That was they did it. They were smart about it, and they did it before it was something that became a big thing. Like, imagine them trying to get subscribers right now. It would have been very hard to compete against everyone else. They were one of the first ones to get in. So this is one of those things, like in terms of like a business decision, that was a good business decision. They're getting to the point where they're being able to monetize that business now as their linear business starts to, decrease a little bit, which tends to have a lot of operating cash flows. The DTC business is starting to pick up steam and actually pick up where a lot of that cash was coming from. So I think Disney's got a good future ahead of it. Maybe another 5 to 10 years worth of solid growth. In terms of a short term, short term, they've got some headwinds here and there, like some of it specifically dealing with like PR related issues. Like, dude, you can't say the word Disney on Twitter without like the hate comments just populating everywhere. You know,
It's
so
not a
they definitely have
beloved
a
stock
fair
on
comment.
FinTwit yet. It's a hated stock on FinTwit right now.
It's a hated stock, and with good reason with respect to that, because a lot of people feel like they are disrespecting the base customer that got them there. Right, a lot of people that grew up on Disney now feeling like, as parents, they can't share that with their children now because they're worried about what some of the messaging is. I just think in general, like, I mean, and then at least for me, I'm the only one here who has kids. Like, I'm just going back to like Tom and Jerry and like Looney Tunes, silent, no nothing, not politicized, just being funny and entertaining. And I think, but it's like we were saying about Palantir. If Palantir's biggest issue is sales, it's one of the easiest things to fix because it means that a lot of other things are fine. And I think with Disney, although this is, we're seeing it in the comments, they are valid points about the politicization of the company. It's also very easy to fix. It's also very easy to fix with a concerted effort to create different types of content. I mean, Chris, did you share that whole thing about the that park that they're looking to build, the America whatever park?
No. That's something separate. So we can talk about that another time. But that's something separate.
But in other words, like those are the steps that they can take easily. An olive branch, which costs them nothing, and it's very easy to get those people back.
Yeah. I mean, it's one of those things that whenever anyone asks me about like a company and their history of making some moves that just go, you know, like don't do well in terms of like the public, I ask them, hey, what car do you drive? They're like, oh, I drive like a Mitsubishi or a Toyota or a Japanese car. I'm like, what? You don't care about Pearl Harbor? Didn't the Japanese bomb Pearl Harbor? Oh, well, I drive a German car. Oh, what about Hitler? What happened? Right. BMW, Mercedes, or Hitler's cars. You know, what about Fanta? Fanta was actually developed by the fucking Nazis.
Wait, the drink?
Yeah, it was developed by the Nazis. You didn't know that?
I did not know that.
Then there's
join my Fanta.
Then there's
Fanta was started during World War II. Yeah.
Then there's like all sorts of fashion brands. Like was it Hugo Boss? Hugo Boss made fucking uniforms for the Nazis. Okay, like literally the German like outfits, the uniforms, all those shits were designed by Hugo Boss. You don't see those companies going bankrupt. Coco Chanel, I think, was it Coco Chanel or one of these other ones that were literally like best friends with? I'm telling you, there were companies that supported the apartheid regime in South Africa. That wasn't that long ago.
That was
okay,
true.
You know, there are tons of companies that have shitty histories, but then guess what happens with the companies? They understand PR. People move on. They make content that more people resonate with, and then eventually the business gets back to normal. You know, no one talks about Apple and their Chinese slave labor. Remember the suicide camps? I mean, that wasn't.
Yeah, if we don't see it, we forget about it. And that's the sad part. But
I was working at an ad agent. I was working at the ad agency that had BP as a client when they destroyed the Gulf of Mexico. And I remember them saying, you know, having the conversations about how do we fix this? Not one of the conversations was about what they can do technically to work on the business. It was literally like, what's the message? Do you know what we ended up doing, dude? We ended up getting video of we ended up like getting all this video of people in Olympic history that have fallen and gotten back up and won. I'm not even kidding. Okay. So it was like, scour the internet, guys. Let's get all the video of all the people who like failed, you know, at the high jump or whatever it was. And then we cut this like video of like, you know, his people falling, and then they miss, and then they lose the medal, and then you see them get back up and run, and then they win. And at the end, we just have a slogan that says, you know, when you fall, the great ones get back up.
That sounds like a Nike ad, not a
that
BP
was
ad.
Literally the solution. Just change the messaging.
That's hilarious.
AJ, I don't know if you actually saw that campaign, but if
I feel like I remember, bro. It was 2008, 2009. I remember
that was a long time ago. Yeah, that was like maybe even 07. Oh no, it was a little later, like 9, 10, around there. But that's the point.
Okay, so
Chris,
last point, then we're gonna get into something else. Go ahead.
Yeah, Disney just has a lot of headline risk right now, you know, especially with the whole governor of Florida like beefing with them. Like a lot of that is headline risk. And believe it or not, I think behind the scenes, that's already starting to die down. Like it's not even something that's but it's something that it happens gradually where people start to like forget. Like I don't think when a new superhero, like a Marvel movie comes out, that's actually a good Marvel movie, people are going to be like, you know what? I really want to go see it, but I am so politically correct in my leanings that I am not going to go see that movie, or I'm going to prevent every single person in my family. Dude, that's reductive thinking, man. Like, no. You know.
Okay, so let's get deeper into the Disney thesis. I want to start it off with content, and then we'll get into parks. So I'll give the bear case first, and then Chris, you can address the bull case for content. The bear case is they're losing subscribers, and outside of the sports stuff, people are unsubscribing because there's just not any good content on there. Hulu and ESPN are a bit expensive, and you can talk about the gambling stuff with ESPN that they just announced. And the content just doesn't have a chance to reach the sort of masses that Netflix does with originals like You and Wednesday, whereas Disney's kind of this niche thing for kids, and we've got YouTube Kids. And so the market in general to expand to 300, 400 million subscribers is a little weak. And as a result of that, you can't rely on legacy Snow White IP or what is it? Winnie the Pooh IP, if that's Disney. I think that's Disney, in order to be able to.
Says who?
So how do you respond to that?
Wait, sorry.
I would say
it again. I'm sorry.
No. So I'm saying that they can't keep monetizing old content, and I'm like, you.
Do you know when Superman, like, do you know when the first Superman happened? You know when Spider-Man, like, tell that to Stan Lee. Stan Lee's been monetizing that napkin drawing of Spider-Man.
I mean, to push back, they can't keep making Frozen 2, 3, 4, 5, 6, right? So I guess
Yes, they can.
Okay, so you can go into it. What is your thesis on why Disney Plus is a content machine that'll survive over the next, I don't know, decade?
Because number one, they already have a lot of IP that's there that they can just rehash, retag, and put it again. Okay, here's an example. When the first Lion King came out, right, the cartoon version, right, Lion King in the theaters made how much money? I think around 400 million, right? In the box
today,
office,
that would be a lot more. Adjusted for
that would be a lot more.
Yeah,
like, do you know how much money Lion King, the animated like movie, it did in the box office?
Well, a couple 100 million, 400 million, 500 million?
Adjusted for today.
No, not even adjusted. The new one that just came out.
No. Wait, the one with Beyonce?
No, the CG one, right? The CG one?
The CGI one. Hold on. Let me just, once I share this with you, it'll blow your mind. Okay. Go ahead. Look at that. 1.6 billion.
Oh, in 29. This is the one with Beyonce. Yeah, this is the one with, yeah, she was singing.
Yeah. 2019. Wow. So a content that was made back in the day, like, and the license, all the IPs already paid off for, still generated 1.6 billion in the box office. Even these remakes, we may see them and be like, oh my God, it's just a remake. Who's going to watch it? Dude, the new Little Mermaid with all its PR issues still made 600 million in the box office internationally. This is not a company that's just like losing money hand over. Avatar, the one that just came out, made 2 billion at the box office, and then now went to the consumer business, like the what is that thing called, the rental market, and like Amazon and Google made money there. Now they have Avatar that came onto Disney Plus, so there's going to be that content. Plus, they have Avatar themed stuff at Disney parks, right? You look at how much money Frozen made. Frozen made a shit ton of money, and then Frozen 2 came out, made even more money. Then Frozen is actually really licensable to like, what do you call it? Like, you know, like manufacturers,
merchandise,
like, different merchandising and all that. That's all high margin revenue. All Disney has to do is just say, okay, go ahead and make your backpacks with the Frozen theme on it, and they get high margin revenue coming in without doing.
Dude, we have frozen yogurt. Like, literally, the yogurt in the fridge has like Elsa on it, and that's the one that, like, you know, that.
So your argument with content is you have no concern over their ability to get monetization out of their content.
Look at Mr. Seymour Duck, 426. Nintendo 100 years old and still making Mario games, and now they've reinvigorated the brand with the movie. So there is a level of it. The other thing too, there's a lot of turnover, especially when you're going after that young market. There's a lot of turnover for those for kids like that. At that age.
How do you reconcile growths in subscribers then, right? Because the street needs to see this Disney Plus thing turn from 150 to eventually 200. Netflix is at almost 240.
No.
Add up. Wait, but they own ESPN, they own Hulu. Add up all of the subscribers to all of the platforms that they own. It's not fair to say just isolate one. You got to look at they're making.
That is all of them.
That was 116, or that was 100 and whatever Disney Plus subscribers. But what do you have? What's ESPN subscription? What's Hulu? What else do they have under their umbrella?
A shit ton of stuff, man. Discovery, National Geographic,
right?
All like their main 3 DTC platforms: Hulu, Netflix. Hulu, ESPN, and Disney Plus. Combine them together, and it's actually more than Netflix right now in total subscribers. But the thing is, each one is separate. Eventually, I can see this becoming a super app where literally you just do a bundle, you buy one package, and you're going to get all 3, in which case it'll be a great great thing for them. They can also do targeted advertising now through DTC that they wasn't necessarily as available with linear, where now you can do very like person specific ad targeting, which will be another big high margin revenue driver for them going in the future. This is one of those things that Disney is transitioning from an old business model to a new business model. And it sucks that they had to deal with COVID at the same time, because overall they would have been able to successfully go from linear to DTC. But COVID came and really like wrecked those plans. And now as investors, you're getting a deal on a generational company, like literally one of the premier generational companies on the planet. So Disney's not going anywhere. Anyone thinks that Disney's dying tomorrow, good luck. Go ahead, short it if you want.
Have you spoken at all about either a potential acquisition by Apple, or even if they're not, what you see as potential partnerships? Because I have some thoughts about that too, like where I think that their growth stories are now intertwined. I do think like where the future of like Apple needs Disney, and I think Disney also needs Apple.
Well, let's talk about that, because they asked Bob on the earnings call, Chris. I don't know if you heard that, and he kind of just brushed it off. He didn't want to answer the question.
Well, do you know the regulatory process that Disney had to go through just to get Fox, like Fox's assets? Imagine trying to get Disney and its assets. How many regulators, how many monopolies would have, like, there would be all sorts of flags that would go up. Now, on the other hand, they haven't ruled out gaining partnership with like a big tech firm to do more marketing and doing more presentation. So as an example, let's say ESPN, Google has right now pays licensing fees to Disney to put ESPN on its thing. What if Google said, you know what? We don't want to pay you licensing fees. We want to take a large equity stake and we'll share in the revenue and we'll do a lot of the promoting for you guys using YouTube. That would be big for what is that thing called, for Disney, where Disney now gets to be on there. What about exclusive licensing of Disney content on just Apple products like Apple TV or whatever? You see, those are the kinds of monetization opportunities that can come around for Disney that no one's even considering. This Penn National Gaming thing, that's a deal that Penn National Gaming did that's high margin revenue for Disney, because all Disney is doing is just licensing out the content for ESPN on them, but they have no exclusivity.
Yep.
They're not exclusive to that was the other question that was answered. You know, so right now other trading and betting firms could still use it. So I think what it is this is all about content monetization. And Disney has a lot of content. And I think a lot of people right now are very like anti-Disney because of someone's an Amazon Prime plus Disney. Like, you know what I mean? This is just one of those things that just leads to more business. And this is where having people like Kevin Meyer and Tom Staggs is going to be a big plus for Disney going into the future. And not a lot of people even know who they are. So I would say if you're willing to do the due diligence, you'll see that Disney is in the phase of turning around. Even the wokeness that people are looking at today, y'all are looking at it very short term, saying, "Oh, they just created a mermaid that's black. They're woke." Like, there's so many arguments against Disney. It is
a lot deeper than that, and it is actually a concern. Whether you agree with it or not, you want to go to you want to go to like an amusement park, or you want to put your kid in front of the TV and not feel like they're being indoctrinated into anything, whether you agree with it or not. But again, that's also something that's very easy to fix. I agree with what you're saying in terms of the bull case. What I think is not being considered is that we talked about the Vision Pro and then we've sort of stopped talking about it. Apple is still working on this. They've sent this thing out to the developers. And I do think that these sorts of exclusive deals with these mega conglomerates are going to be important, at least in the onset, to have it grow. And I can see some major partnerships with Disney, both in the home as well as in the theme parks, using the Vision Pro, or Disney moving into that space, this new like 4D entertainment space, in the same way that they moved into parks, and in the same way that they do, they moved into like animated movies in a way that they wasn't possible, say, on the Quest, or that they wouldn't have done with Meta. That could yet be another mini S curve on top of what they're already doing. It's a new platform.
I think overall, Disney, like many other corporations, are doing their own soul searching. A lot of this stuff, believe it or not, is woke boards coming online thanks to, you know, BlackRock. I mean, you still got to go back and look at that. Remember that interview with Larry Fink saying we are going to push a certain narrative.
We have to force behavior.
We have to force behavior. What better way to force behavior than getting Disney board members to approve race swapping a character that historically has been white and putting a black person on there because you want more diversification of like a cast? Like, you know, so a lot of this stuff in the background, because that's the other thing too, as ESG fails, you're going to see a lot of these companies return to normalization, right? It's funny that a lot of people that are being so critical of Disney are using YouTube and Google right now, considering one of the wokest companies on the planet right now is Google. Okay.
It is.
So why are you watching YouTube? Go ahead, lead your protest. You know, like Apple, same thing. Apple's super woke. You guys are not like, oh yeah, you know what? Let me toss my Apple phone away. And
Apple's more neutral. Apple's more neutral, and in general, they try to stay out of it. And if you think about it, they've avoided a lot of the negative press and a lot of, like you said, that headline damage that has plagued other companies. And they're the largest company in the world, so it's not even like you can say that it's affected their market cap. They've been the most successful by being neutral.
Yeah. I mean, Disney is definitely getting back into neutrality. It's just not going to be something that happens overnight. You know.
Can you speak about the debt Disney has? Disney has, is that a concern? It's like 40 billion.
It's low cost. It's low cost debt they issued during, right before COVID to finance the Fox deal, and then some of it during COVID. It's all low it's like really low debt. A lot of corporations right now, people are like, oh my God, corporations have all this debt. Yeah, most of that debt was financed pre-COVID when the rates were like 1, 2, 3, 4, 5%. So their credit rating is fine. Their debt is well managed. That's not a worry for it's not a worry for Disney.
So Moody's isn't going to downgrade Disney.
No.
Okay, cool.
Yeah, so I think that's right. What Jorge Rubio just said. People are selectively woke. That's what it is.
Yeah, the thing about Disney is they associate
term.
Disney with kids, and if you apply wokeness to kids, that's where people get really triggered, right? And
Carlos is
a good example. He has kids.
I totally agree with that. I think a lot of the stuff that they're trying to pump out, and the message that they put out there, especially because it caters specifically towards kids, because we see the brand as a kids brand. That's where I'll draw the line, and I'll say that shit needs to stop. But if you listen to the annual shareholders meeting for Disney, every other question was about this woke thing. And it was like,
really?
It's like, when are you guys? Yeah, dude, you should have seen the shareholders getting fucking upset. Be like, when are you guys going to go back to political neutrality? Like, they actually were voting on it, like during the annual shareholder meeting. So
when was this?
Right now,
when was this?
Earlier this year. Bob Iger was on there. Bob Iger had to play the politician and just, you know, because the thing is, you can't give everyone what they want. If you try to satisfy one side, you're gonna lose the other. So how do you what is that thing? How do you thread that? Not total line. How do you thread that needle? And I think Bob Iger is actually one of the better people that knows how to do that, and I think he will do it successfully. But we'll see.
Okay. Anything else on Disney? Because if not, I got a new topic. Anything else?
No,
I think
go for it.
That's pretty much the thesis. If you got any questions, put it in the comments, and KRIS hopefully can get some of the comments a little bit later and respond to them. But Disney's a buy, according to KRIS right now, and earnings were not too bad. So
I was surprised at that dividend. To be honest, I was really surprised. That's a sign of strength or confidence on the part of leadership. I was really surprised.
It's because it's the cash flows, man. Dividends are all about cash flows. If the company can generate meaningful cash flows again, this company will go back to trading what it was pre-COVID and higher, because
but you'd expect them to want to use to deploy some of that capital to continue to grow. But what they're saying is, we have enough money to do everything that we need to do, and we want to share in some of that profits with people in the form of a dividend.
I'm gonna take one step back and just address a comment. Right there, I have to say the Freudian slip one real quick. It's like, I'm gonna have to say I'm concerned that KRIS doesn't understand the difference between wokeism versus what Disney is voicing support for, is taking away from parental rights and education. Okay, so let's take a step back, and this is where real due diligence is gonna kind of like take a hold. And this is what I've done, and I published this on my Patreon, and hopefully my patrons understood. You know, Disney was actually very politically neutral going into this whole thing with Ron DeSantis and the Florida thing with the kids having parental rights. Disney was actually trying to stay out of it completely. But Disney, being in the creative space, What does creative space usually come with? It comes with a lot of people who side with liberal philosophies and very progressive backgrounds. There was a giant employee backlash against Disney where people were saying, Disney, why are you not speaking up? They were literally protesting. Your own employees were protesting outside of Disney parks at the time when this was happening. Bob Chapek at first tried to just be politically neutral, not bring it up, but it was something that just kept coming up. And in his moment of weakness, Bob Chapek turned around and said, we're going to support our employees and X, Y, and Z. And boom, now Ron DeSantis says, I've got the perfect target that I can utilize to punch and basically to put a face to it. That's the point, that this is one of those things that as a CEO, you have to contend with policies that your employees, you're trying to keep them happy. You're trying to keep them working, because otherwise, if they start leaving the job, quitting, you're going to have a problem running your operations. Bob Chapek made a really stupid move, in my opinion, which was he ended up going the political route. And that drew in Ron DeSantis and everything else. Bob Iger actually specifically came in, was replaced Chapek, and is trying to repair the brand. But he can't come out and say outright, you know what, everything my predecessor did was stupid. We're going to go back to it. Screw all these woke people. What do you think? You think that's how CEO operates? You think that's gonna not alienate the other half of the country that actually do espouse some of these views? So this is where I have to tell you guys, as a good business savvy person, Bob Iger will thread that needle, but he'll do it very slowly, and you cannot use the past demons to justify today's perception.
It's a good point.
Good point. Otherwise, why are people even with Logan Paul? Like, there's so many even content creators. Like, look at what's her name. There's so many of them.
What are you gonna say?
Like,
what's her name?
Logan Paul, Jake. Look at Logan Paul and Jake Paul. Basically, robbed people using their crypto thing. They're still around.
That's a good point, bro. CoffeeZilla had the biggest expose of like a month, and then everyone forgot. No one cares anymore.
Yeah.
Right?
Yeah. Look at all the FTX stuff that happened with all those content creators. You don't see people not following them anymore, right? Maybe their growth and subscribership has gone down. Like Graham Stephan, did people say, you know what? This guy's a grifter. I'm never gonna watch his shit again. I mean, so this is one of those things, and that's where, in my opinion, that's really bad. So all I'm saying is, people and time will eventually forget. I know the rage is out there right now. I totally support your rage. I get it. I have nieces and nephews that are kids too. I don't like some of the views that Disney took, especially when it comes to parental rights. Like, I feel that parents should have the rights to, monitor what their kids are actually learning in schools. I totally agree with that, right? But I'm also on the other side as a business person, and I know that you can't just overnight go in one direction and then go in another and not lose half the country. So
Freudian slip did make a good point. It's kind of buried now in the chat. He was going with it. But there are, like we were saying about Apple, some of the scandals that Apple went through with the people literally jumping out of their sweat factories. There's been a lot of how do we say contentious things that have happened at the Disney parks with respect to the safety of children and some of the people that they've hired. And that's kind of the stuff that gets buried. These are also stuff that I get concerned with as a brand too, that they are a breeding ground for some, we'll just say, illegal behaviors at their parks. And that's a little bit harder to deal with in terms of as Bob Iger. The funny thing is, it hasn't really been making too much news, but I think it is still a fundamental issue for the company.